I think overall, I think if we take a balanced view of the industry, I think we have to say that the future is bright. Why do I say that? First of all, the industry as a whole, I referred to, out of the $1 trillion is made up of $300 billion, of which only 55 billion are in mutual funds, and the balance we said are based in managed accounts or segregated accounts. Now, the wealth collectively out of emerging markets, as we all know, is growing. The pendulum has shifted in the direction from the Western economies to emerging markets. Hence, for example, the 4 countries commonly referred to as BRIC, which is Brazil, Russia, India, China, and now more recently Goldman Sachs has added the word I at the end, which stands for Indonesia, called BRICI, in other words, B-R-I-C and small I, Indonesia. I think that this is all a very healthy development, that within the world of emerging markets, we have multi-millionaires being created. China and India are only 2 small examples. If we take a look at what is happening in these markets, China is acquiring companies in Europe, they're acquiring assets in Africa, maybe in natural resources, and they're acquiring assets in generally of shipping and other assets which they're acquiring. India has already acquired a lot of assets, whether we talk about the steel company, Mittal, or whether we talk about Tata Group acquiring, for example, the Range Rover and the Jaguar as an example. Chorus Steel being acquired by another Indian company. I think these are just some small examples that I give. So in other words, I'm saying that the backdrop is that in the next 10, 20 years, emerging markets is where we're going to see the growth. Now, within the world of emerging markets, we do have Islamic finance. And Islamic finance is well poised, and Islamic, or rather Sharia compliant wealth management is well poised. However, there are some challenges as well to this bright future, which we should probably refer or talk about. What are the challenges? I think the challenges I've already alluded to earlier. The first one is that the financial institutions must come out of their national market and be more active in the cross-border area. Now, certain financial institutions from the Gulf region have acquired, for example, banks in Turkey. The Islamic banks in Turkey are referred to as participation savings banks. There are 4 of them. 3 of them are owned by Middle Eastern financial institutions. Who are they? They're Kuwait Finance House, owning 1 bank in Turkey. You have NCB, which is National Commercial Bank, owning another bank in Turkey. And we have the Al Baraka Banking Group from Bahrain, which owns a bank in Turkey. So what I'm trying to say is that there is some acquisition activity taking place from the Islamic finance world, which is all going to be a very healthy drive. However, we also have seen to some extent that international financial institutions such as HSBC, such as Standard Chartered Bank, such as Barclays, are also getting into the world of Islamic finance. And the penetration of Sharia compliant wealth management in countries like Indonesia, like Egypt, like South Africa, or for that matter, Turkey, at the moment is very, very small and very limited. So the opportunity can only be much bigger than what we see today. The European market, again, besides socially responsible investing, which I said was north of $5 trillion earlier on, we are seeing no activity at the moment in the world of Sharia compliant wealth management. So Europe, again, remains a very big opportunity for this industry to expand. And I think that the good thing is that it's not only the Islamic financial institutions offering Sharia compliant wealth management. We also have institutions such as UBS, Credit Suisse, Barclays, HSBC, Standard Chartered Bank, to give you some small examples, who are already active in this sphere for their private clients because there is demand from their private clients for these type of solutions. So in that sense, I think we should see a fairly good development taking place, provided the industry is able to meet and raise the bar of excellence and actually meet some of the challenges that it faces across in the next 2 to 3 years.